Hey everybody, it's Brian Shannon from Alphatrends.net. Hope you had a good week of trading. The market finished kind of mixed here. The S&P 500 up 3/4 of a percentage point. Nasdaq gained a little bit of ground as well, but the semis were the bigger sell-off group, as was the biotechs. But the biotechs, we'll see in a minute, are actually starting to look like they're in a position to maybe get ready to bounce here. So let's go ahead and take a look at the charts and make some sense of all this and see if we can use that information to make some money next week. We remain in a very healthy uptrend. As I've noted, the measured move would give us an objective up near 242 or so. Doesn't mean we're going to get there this time, but we still have positive upward momentum. And again, we closed with another winning week for the S&P 500. So it's very difficult to be bearish when the market behaves as well as it does. For today, we gapped lower but finished right near the close of the session, and that's kind of been the pattern that we've seen a lot of positive closing action. And as they say, the pros act on the close, and these closing prices tend to be near the highs for the session on most of the last 10 or so days, and even further if you go back. But there's nothing here indicative of a top. Next week, what we'll be looking for is for this to be our first band of support. If we break below that and then stay trapped below a 5-day moving average, which then starts turning sideways to lower, then we will change our intermediate term outlook. But we still have been bullish, since this market began to rally back above that rising 5-day moving average. And this is why we continue to give the benefit of the doubt to the buyers. And we're not looking for a top. Instead, we're looking to manage risk based on the time frame that you engage the market on. And for the S&P 500, I think that the key level for next week will be if we continue to hold above 235, then we will look at any correction as a time correction. And if we break below that, then a price correction. We will deal with that if and when it comes. Eventually, we're going to have a pullback again, but it's nothing to be freaked out about. The Nasdaq made a real nice recovery here at the end of the day. You can see that we had been kind of negative most of the session, and we not only that, but we got up to what I think it is an important level and through it, and that is the week-to-date volume-weighted average price. So the average price the Nasdaq 100 traded at is right here at that purple line, and we got back above this prior little level of support from Tuesday and Wednesday, which then acted as resistance on Thursday, and today we're back above it. So going forward next week, as long as we remain above 129.5, then we give this intermediate term trend the benefit of the doubt, and we look at any correction as a time correction until we break below 129.5. Don't overcomplicate it. You don't have to worry about the presidential policies or other news stories. Instead, we focus on price action. For the Nasdaq, we came down and tested our important 137.5 level and held that today. So that's good to see, because on the daily time frame, this has been an important level of prior resistance here as well. This market has been kind of the laggard so far this year, but it came down and found support today intraday at this prior band of resistance and at that rising 20-day moving average. So I think that today's low is going to be the important level for next week. Now, we are currently in a little bit of a range-bound environment, and I think that we'd first like to see it get back above the 5-day moving average and then be able to continue to make higher highs and higher lows from there, because the daily time frame still looks like it has more room to run, especially when you compare it to something like the Nasdaq or the S&P 500 here, or the Nasdaq, which have both had magnificent runs, but the Russell 2000 has been held back a little bit. So perhaps we see that this market can catch up a little bit. Getting above and holding above 139 will be key for next week. Semiconductors, as we mentioned, they pulled back a little bit. They lost about a half of a percentage point this week, clearly doing zero damage to this overall bull market that this group has been involved in. We're still making higher highs and higher lows above a rising 50-day moving average, and even if we were to pull back all the way to the 50-day moving average, that would only get us to this level right in here where we've had prior resistance and support. So I think that for now the semis are kind of pulling back a little bit, and probably better to avoid overall, and maybe spend more time focused on something like the biotechs, which last week we noted they have found found resistance at the volume weighted average price from the peak that this group traded at in 2015. We saw that that was the potential for resistance, and it did in fact act as resistance. So it's good when a market does what you know kind of obeys the general areas where it's supposed to find support or resistance, and we're pulling back from there. I find it encouraging that if you take a look at this most recent rally, we remain above that. So we're looking at a 30-minute chart here going back to the beginning of February, and we remain above that. The one thing is that we are below a declining 5-day moving average. I think that the key will be neutral back above 290, 291, and then bullish probably above 293. Looks like the biotechs have the chance to be able to make a run for 300, perhaps as early as next week. Apple held onto its gains real well. Now, it did break its trend line since the last earnings report, and it briefly broke below the 5-day moving average. So maybe the trend is slowing. That's all we can read into with that trend line break, but it does not mean a reversal. We still have a rising 5-day moving average, and I think next week, if it gets below here, then we'll start to see that pattern turn into lower highs and lower lows below a flat to declining 5-day moving average, meaning it might need some more time to correct, as it has had a very nice run here. There's no indication still, though, that the trend on the intermediate term is reversing. We're still above a rising 5-day moving average. The bonds gained some ground this week. My belief is that they're still undergoing, at best case, a stage 1 accumulation down here. This has been the band of resistance. Here's the band of support, and they're getting up towards the top end of that range. So it tells me that there's more risk being a buyer up in here. I think that what's likely for bonds is they kind of do something like this again, and they're starting to show signs of stability. But that does not mean that the bond market is going to start screaming higher once again. The shares of NVIDIA, I pointed this out for subscribers that if you take a measured move from point A up in here to point B right down in at this low, and then subtract that from the top of point C, well, we came up with a price objective of 96, and that's exactly where we opened this morning. At that projected level, the buyers were supposed to be found, and it did that after undercutting the earlier in the year low. So now, it's had a strong decline here the last 2 weeks since earnings. Let's take a look at a 30-minute time frame, and we can see that it tried to hold above the volume weighted average price since that earnings report, and certainly wasn't able to from the peak there. But the stock, has obtained its bearish objective for now. You've got to think about who are the people who had stops under here, who shorted under here. Clearly, in my mind, not a good idea, because you have to ask yourself, where has it come from? And oftentimes we see that a quick little cheap low below that leads to a recovery. So I'm thinking that that this stock is likely to continue to bounce next week, although it is higher risk with that declining 5-day moving average still. Let's see, I've been talking about ATI because ATI has a large short position in it, and it had what was looking like a good chart here. We talked about, perhaps it had the ability to fill in this big hole here, especially with that big short position. And we've been stalking this stock, but we haven't purchased it. What we've been looking at, here's the daily time frame. We were looking at first at getting back above this level, and then we were looking for it to get back above this level, because that's where it would have made a higher high above a flat to rising 5-day moving average. So we were looking for it to come back up. Let's look at a 15-minute time frame. We were looking for it to come back up to here, pull back a little bit, and then break a higher high above that 5-day moving average, because we don't chase these gaps. Instead, the stock has continued to move lower. The shorts are in control here, so we're down to the 50-day moving average. Perhaps it acts as support, but I'm not willing to buy the stock while it has a declining 5-day moving average. And now that the volume weighted average price that we had been referencing since that gap higher, since we've been stuck below that for a while, it tells me the shorts have worked hard to get back control of this stock on the downside, and I'm giving them the benefit of the doubt right now. I don't want to be a buyer, not while it's behaving this way. We did also see that that Tesla lost some big ground this week, and realistically it came down right to where it was supposed to, and that was the volume weighted average price year to date. I had done a tweet about that on intraday when the stock was over here at 260-ish um, on Thursday, saying that it looks like it's headed for the year-to-date volume-weighted average price. It found some support there for now, and I think that you're going to see some volatility. Most likely, we get a bounce back up towards 265-ish next week, and then we'll have to look at that as potential resistance because we do still have that 5-day moving average declining. Maybe it can recover like this, but for now, a little bit of a pullback in Apple. I don't think it's damaged the longer term uptrend by any means, but it's into an area where we've seen resistance in the past after having a big run. So where has it come from? Where does it have the potential to go? I think it's best that it has some time to settle down. Baidu's another stock that had big hopes. I was thinking that the weekly chart here had a real good look to it. I've been watching this one the last several weeks as it's setting up within this bigger range, and it got up towards the top end of that. I didn't want to be a buyer ahead of earnings, especially after it had had a run like this, and sure enough, it sold off hard on earnings, as did Nvidia and as did Tesla. So we have to look at some of these bigger stocks losing ground and saying, okay, that tells me that I need to be aware that some of these bigger stocks that have been market leaders are pulling back a little bit. Perhaps that can trickle through to the broader market, but as long as the broader market continues to hold above the key levels and your individual stocks that you're trading continue to hold above the key levels for your time frame, then that's what you should be paying attention to, not trying to make a decision about every single stock in your portfolio based on one day's activity of the S&P 500. Hope you had a good week, and I'll talk to you again next week. Thank you.